FX Nation, what's up, guys? Welcome back to Forex U's advanced course, and welcome back, guys. Today we're going to be talking and breaking down what a daily routine should look like for you. Okay, and this is in the context of daily routines, as far as like every day when you're going to trade, right? So every day when you're going to trade, the type of things that I would suggest that you would start to implement into like a daily routine. Okay, so that way you could be really just focused on what you're about to do and how to execute on a daily basis when you're going to trade. There are definitely certain things, certain aspects that I think are really important for you yourself to recognize when it comes to trading, and when you're about to go up to your computer and start looking at trades. This is not just something that's randomized or anything like that. So if you want to do it at a high level, if you want consistency, and I always talk about consistency because it's huge, because it's the only way to grow. But if you consistently want to be profitable trader that can grow the account over a long period of time, then it's very important to understand that your daily routines, as far as how you come into the charts and how you start your day, is hugely important. Because if you can recognize that that specific day may not be let's say the best for you for whatever reason. Maybe you had a bad day before, maybe you just had an argument with a loved one, maybe you're just not feeling well, whatever the case may be. You have to understand that you have to be aware of the situation that you're currently in. And so if you're not in the best space of mind to actually look at charts, then it may not be the best time for you to actually be looking at charts, or let alone take a trade. So very important that you understand that concept of when you're building out a daily routine. And of course, everybody's daily routine is going to be different, but these are just some things that have helped me over the years. And just to be consistent, really. And there's going to be times where you're not going to have bad days and you're not going to be fully on your routine, and that's completely fine. We're human beings, we're not perfect, and that's going to happen. But if you can just build a consistency over a period of time, that's going to help you tremendously grow as a trader, and grow obviously your account on a consistent basis. So the first thing that you should do when you come to your charts, to your office, is going to be to check the news. Okay. Now, the best place, I think to check the news obviously is Forex Factory. You guys see me do it all the time. And so I just think that has the most relevant potential news coming. There are other websites like Daily FX and stuff like that. Even investing.com has news events. I mean, there's a bunch of sites that have news events. I think everybody's go-to is just Forex Factory, just because it's simple, convenient, and very easy to see and understand what's going on. So let's talk about the news. Why is it important to check the news before doing anything else? Before looking at the charts or anything like that, it's very important to check the news. Let's talk about that. So you have to understand that the news itself, it has a very good potential to disrupt technical analysis, disrupt technicals, right? So when you're first starting to trade and you're brand new to the concept of how we trade, you have to understand that when you trade the news, or when you're trying to trade the news, yes, the news can make the pair very volatile, and you can get a huge move that happens. But if you don't understand why that move is happening, then really at the end of the day, all you're doing is just gambling. So if you're new and you're just learning this, as far as learning the strategy, learning how to trade it correctly, you should not be trading when there's news, when there's major news events going on. Okay? You should not be trading with those, because the news is going to be used essentially to help market makers either hit their targets, let's say either hit their targets. It's also used to essentially complete patterns and things of that nature. So just be aware that the news is used in those type of ways. Okay. So if you're new, honestly, it's just better to avoid being in a trade when news is coming. Okay, and especially if there's a big news announcement coming for a specific particular currency, pound or euro, US, whatever. Maybe that particular currency is not the best to trade. Maybe you should trade some of the crosses of that. So if you have news, let's say, coming up for pound, and it's major big news that typically moves the market in a big way. If you're new and you want to kind of avoid that kind of situation, obviously, then maybe you should look at potentially trading, either some of the euro pairs, like Euro JPY or Euro Swiss, something like that, Euro AUD. So you have different options, obviously, when news is coming. So if you're new, you're not sure, you're not seeing things clearly yet, you fully don't understand and grasp what happens when the news comes, then it's just better to avoid it. You should not risk, okay? If you don't know how to do it, you should not risk. Because if you're risking when you don't know how to do it, you're essentially just gambling. Okay? You're literally essentially just gambling. So there's no need to gamble here. Okay? We're not trying to get rich on one trade. All right? We're trying to slowly and steady, consistently grow an account over time. All right? So once you get more experience, you can see the news setups. So once you do your back testing and you start to see what news events actually do and which specific news events actually moves the market versus the ones that don't, then you could build out a plan around the news specifically. Because there's going to be news events that are red folders in Forex Factory, right? But not necessarily, they don't really do anything. That particular news doesn't affect the market as another news event would. So just because the folder is red doesn't mean that it's going to have a major, huge impact on that particular currency pair. So very important thing to recognize. Okay, and as you go through back testing, and things of that nature, you'll begin to see which news events matter, which news events don't matter. Okay, but once you get used to trading, once you get more experience under your belt and you become more consistent just in your normal trading, then you can start to really expand your knowledge and start to look at trading when it comes to the news events, releases, and seeing whether or not you can identify what market makers are trying to do for that news event. And we're talking specifically, let's say, the news events that are actually moving the markets, or that are going to move the markets, right? So those are all very important. Okay, so let's talk about next, as we continue the talk with our daily routine, let's talk about market conditions. Okay. Now, your job as a trader is to be able to identify the type of condition that the markets are in, and generally just try to apply the appropriate action to those type of market conditions. Okay. So let's talk about some of the market conditions that you will see and you will run into. So the first one being consolidation and accumulation, right? So that's one type of market condition. That's typically during the Asian range we have of our strategies when we have the consolidation and accumulation, right? Most of the time that happens between, let's say, 5 p.m. and all the way up to like 2 a.m. Eastern Standard Time. That's when most of the consolidation happens and most of the accumulation of contracts happen. Now, that doesn't mean that that's literally the only time that it happens. As you guys know, that during London session, there will be some days where they like to move sideways and accumulate the contracts during the entire London session. You know what I'm talking about, because you'll see that the Asian session is consolidated, and then throughout the whole London session they'll do nothing, let's say, but move between the high of Asia and the middle of Asia, high of Asia, middle of Asia, back and forth, back and forth, back and forth, the whole entire London session, right? And so when you see that kind of behavior, what I always tell you guys is that whenever you see that behavior happen throughout the whole London, is just basically them collecting contracts throughout Asia, throughout London. The move is going to happen on the New York session, right? Expect the false move to happen, let's say, during 7 o'clock, that 7 to 8 o'clock time period. And then right at the beginning of the U.S. session box is when you should start to see the real move happen, right? And so understand that the consolidation and accumulation phase doesn't just happen, during the Asian session. There will be some times and some days where you will get that condition, that accumulation, that contract getting that happens throughout the London session. And those times are really easy to see, because you will see them literally get stuck between going from the top of the range to the middle of the range. And the candles are also another dead giveaways, because the candles are so huge. You'll have one candle that goes literally from the top of the range to the middle of the range in one candle. And then you'll have another candle, the next candle next to that, it does the same thing. So you'll see that back and forth, back and forth, back and forth. And all they're doing literally is just trapping traders and trying to get as many traders as possible in a trade and get them stuck for the next 4 hours, 6 hours until the opening of the U.S. session, so they can actually absolutely destroy them. Okay? So the next market condition is the stop hunt. Right? So you have the accumulation that happens, then you have the stop hunt. Well, what's the stop hunt? Right? The stop hunt is the actual move, the acceleration that happens after the accumulation, that basically gets traders into trades. So if you didn't get caught up in the accumulation consolidation period of Asia, okay, or in some cases London, the stop hunt is that fast moving 2 or 3 candles that happens after accumulation that gets the rest of the traders saying, aha, we're going short. So they get traders to go short, and all they're doing is stop hunting them, right? They're just convincing them, inducing traders, creating the panic that they need so that traders have the fear of missing out. Okay? So realize you get the accumulation, and after the accumulation of the contracts, you get the stop hunt. You get the false move. Okay? And it's hugely important that if you're going to trade the strategy and you're going to trade it to a high level, you need to understand that there's going to be accumulation, there's going to be the stop hunt, and you have to wait for that stop hunt to happen. Because without that stop hunt, you don't have the clues needed in order to take the appropriate trade in the correct, which is the next part, which isn't the correct trend. Okay? So the trend is where we want to take the trade. Okay? The trend is where we take the trade. This is the trade, the actual move that we want to be in, the trend. So 3 types of market conditions: accumulation and consolidation, which is basically the Asian range, sometimes the London, right, depending on what they're doing. The stop hunt, which is a false move that's used to induce traders and to get traders to trade the wrong direction. That's the 1 to 3 candles, right? That looks like, holy crap, the market is moving and it's going in one direction. It's going short, right? And they move down 25 pips or so. And you're like, man, I'm going to miss out on this trade if I don't get in. And as soon as you get in, what happens? Price reverses and goes against you, and it trends for the next 4 to 5 hours in the opposite direction, and you get taken out. Okay? So those are the 3 types of market conditions that you're going to have. So now let's talk about the daily routine. So what are things that essentially you should be doing on a daily basis every time that you come in and start looking at charts? Okay? So the first thing that you'd want to do is, after you look in news, you want to verify the count on the 1 hour chart. Right? Go look at the 1 hour. What is it doing? Do you see where you're at? Can you tell where peak formation low is? Do you know what level you're on? All these questions you got to ask yourself. Do I know what level I'm on? Do I see what's going on? Do I see, the bigger picture of what's going on? Okay? Can you verify where you are on the 1 hour chart? Either by level, by cycle. Can you see peak formation high or low? Can you start counting levels on that just to know where you are? And then from that is, do you know where you are on the 15-minute chart based on where you are on the 1 hour chart? So when you drop down to a 15-minute chart, can you tell what count you're on a 15-minute chart? Remember that typically you're off by 1 level between the difference of a 1 hour chart and a 15-minute chart. Remember that, because the 1 hour chart is a bigger picture, the 15-minute chart is a smaller picture of the two, right? So can you tell where you are intraday? That's where you can do the Asian box stacking, right, for the week. Look at the past couple of days on the 15-minute chart. Can you tell what cycle you're in depending on what day it is? What cycle is it that week? Can you tell? All these things you need to be looking for, and ask yourself, if you really can't tell any of this stuff, should you be really trying to figure out where you are on that particular chart or pair? There's no reason for you to waste, 30 minutes of your time trying to figure that out on one chart. You should be able to recognize that on a 15-minute chart. Use everything that you know, the Asian box stacking, peak formation high, cycles. What cycle are you on that day? Or that week, I should say. Can you tell what cycle you're on that week? Is it a trending market maker? Is it a level making? All that takes into account. All that takes into effect. All that is important. Asian range being 50 pips or less. That is your ideal scenario. That is your ideal scenario, guys, is for your chart to have an Asian range of less than 50 pips. Now, I want you guys to obviously recognize that depending on what is going on around the world, that things may be changing. Okay, so for example, right now as I'm making this video, we're all going through the coronavirus. So if you're seeing this 2 years from now, when this video is being made right now, we're currently right now going through the pandemic of the coronavirus. And so that changes the market condition, where the Asian range is not 50 pips. The Asian ranges for most pairs now, right now, is over 100 pips easy. And I mean easy, over 100 pips. Okay, so because of that different condition that the market is in right now, because of what's going on around the world, okay, you need to understand that you need to make adjustments to your plan, to your trading plan, based on what's changed. And so for right now, temporary, what's changed is the fact that the Asian range is not a regular 50 pips. Right now, the Asian ranges are averaging anywhere from 100 to 100 pips. Okay, so knowing that, and knowing that even after that 150 pip range during Asia, London and US sessions are still doing another 100 pips, 200 pip ranges themselves. So when you have current situations that change like this, where you have your Asian range that's 150 pips, and you have London and New York session on a regular basis now, because of the current situation around the world, those ranges are also 150, 200, 300 pips almost sometimes. So how do you adjust your plan to adjust to this type of trading environment? Well, it's simple. If the ranges are being consistent right now with 150 pips Asian ranges, you're getting consistent, 150 pip London session, 100 pip, US session. Well, shit, use that to your advantage. You're still trading the actual pattern. You're still trading the timing. That doesn't change. You're still trading the cycle, right? The cycles don't change. So it's just the ADR, the average daily movement of the pairs have changed. So because the market conditions have changed, you can go ahead and adapt, and you can still trade those pairs that have 150 pip Asian ranges and 150 pip London ranges and 150 pip US session ranges, because the market conditions have changed. And so the one thing that is in common with all of the changes are the actual ranges are just more, 3 or 4 times more than normal. But all of the pairs are doing the same behavior. So that doesn't change or take away from what is going on and what you can actually trade. You can still trade those as long as you have the pattern, you have the timing, and you know where you are in the cycle. So that doesn't change at all that you can actually trade it. You just have to be aware of the changes that are happening. And if you're having 150 pip London session, let's say, of course, those candles are going to be huge, right? And so the next thing that needs to change would be your actual risk to reward ratio, right? Because your risk is going to be way higher pip wise, because those candles are going to be 40, 50 pip candles sometimes as far as your stop loss goes. So how do you adjust that and still be able to trade? Because you're going to be able to hit your targets of 30 pips a lot better and a lot sooner because of the big movements that are happening, right? So when you have these type of conditions, you need to be able to just adjust everything. So you adjusted the Asian range, right? The ADR, you've accepted the fact that it's moving, way 2-3 times more than normal. Okay. You also have to accept the fact that your stop losses are going to be way bigger, right? You have to accept that obviously you're not going for just 30 pips anymore. You may be going for 90 pips to make it a 2-to-1 risk to reward ratio. And then lastly, you have to adjust the lot size that you use, because with you now risking more as far as your stop loss goes, you can't do the same lot size that you were using before, because you're risking damn near double, sometimes more, than you were before. So you just have to adjust the lot size to a smaller lot size to accommodate the risk that you're taking with your stop loss. Okay. So that's the Asian range things that are very important for you to understand. And then lastly, you have to wait for the stop hunt to happen. You cannot take, like I just talked about before, you cannot take a trade without waiting for the stop hunt to happen. If you're not waiting for the stop hunt to happen, you're being very impatient, and you need to be more patient. Whether that's basically coming in maybe 30 minutes later than what you normally come into. So if you come into the charts or start looking at the charts at 3 p.m., maybe, or 3 a.m., sorry, for the Eastern Standard Time for the London Open, maybe you should come in at 3:30 or maybe 3:45. And that basically avoids the situation of you trying to get into a trade super early and you actually trading the stop hunt and not trading the pattern. This right here, waiting for the stop hunt to happen, was one of my biggest problems when I was trading myself, when I first started trading this strategy. So one of the biggest problems that I had when I first started trading this strategy, when I first started doing back testing and trading and stuff, was I would always come in too early and I would always trade the stupid stop hunt. I would always fall victim for it because I was still thinking like a retail trader, and I was still getting pushed in, fear of missing out and all that other bullshit that happens. Okay. And so one of the things that I had to do was, number one, be aware of that was happening, and number two, make the adjustment needed. So instead of coming in at 3 o'clock, I started coming in at 3:30, 3:45. So that way, there's no question, by the time I got to the charts, the stop hunt was already on its way or had already pretty much happened. Okay. And I could focus on finding the right setup and the right pattern. Okay. So as we continue, these are part of your daily routine. These are things literally that this is how you go through the charts and you start looking for stuff. So we start looking for the M&W formations, right? You have to have M-W formations. I know that there's going to be some times where you don't get an M or you don't get a W. I get it. Okay, there's going to be some days where you miss those, and that's okay. But we're not looking for every possible trade to take. We're looking for the best setup. Okay, so the faster that you get it through your brain, the faster that you get it through your head, that we're not here to trade every single setup. We're here to trade the best possible setups. And you have to make yourself aware that if the best possible setup is not there or is not present that day, you're not trading that day. It's okay to miss a day. Okay? So the M and W formations are what's going to give you the highest rate of hits, of wins. Okay, I know that there's trades that, there's only one that do the railroad tracks in the reverse and they go, or they do the star patterns, or the quarter wood. Quarter wood, actually, if you look at it on a line chart, it's actually an M or a W. But the best formations, the best setup, guys, MW second leg. MW second leg. Okay? Look at how long did it take that M or W to form. Okay? Did it take 30 to 90 minutes for that M or W to form and to develop? Okay? Remember that the best possible M's and W's that you can take are the ones that have 8 candles between the first leg and the second leg of the M or W. At least 8 candles. Okay? So think about the fact of how long did it take that M or W to develop. Okay? Did it take 30 minutes? Is that basically like a railroad track? Or did it take 90 minutes or so to develop at least? That's over an hour, right? That gives it time for what? That gives time basically for the 13 to get caught up with price with the 5 so you can have the crossover, right? So keep all that in mind, all right? Remember that the best crystal clear setups take time to develop, okay? It's going to be very rare that you have the railroad tracks and the star patterns and stuff like that by themselves, okay? And we want the best possible trades because we want to win as many trades as possible. We hate losing, obviously. All right. So if you take those particular one leg trades, you're going to have more losses. When you have more losses, you get frustrated and you think the strategy doesn't work. Believe me, the strategy works. The strategy works if you just follow your plan that you wrote. Next, using confirmations. Guys, use confirmations. The more confirmations that you have, the better trade it is going to be. Okay? Use all the confirmations as possible. So remember, like I always say, be like a detective and start to investigate each pair. What pairs, out of all the 5-6 different pairs that you're looking at, which ones have any kind of setup developing? Out of those pair, once you take 5 down to 3, okay, which of these 3 is giving me the more evidence, more confirmations? The EMAs, the ADRs, the TDIs, the previous day's lows, the previous day's high marks on the indicators. It's probably going to them to reverse off of it or not. All these things you're using as forms of confirmation. What does the TDI look like? Am I getting a W or an M on the TDI? Am I at the very bottom of the TDI or at the very top of the TDI? Am I getting any pins to the 50, to the 200, to the 800? Am I pinning to the middle of the range, to the top of the range, to the bottom of the range? Am I pinning to the previous day's high, previous week's high, previous week's low, previous day's high? All those things you take into account. And whichever of those 3 pairs that you're looking at have the more evidence, you keep squeezing it down. And you only take the best possible trade setups that give you the best possible evidence. This is why in week 12, I wanted you guys to trade by yourselves and really think about all these different aspects by yourselves. So that way I can see literally what kind of things you guys are seeing and what you're thinking and how much evidence are you actually finding to be able to take those trades. And that's the whole point. Okay? So once you have all the confirmations, once you take the time to wait for the M and W formations to develop, you take the trade. Take the trade, set the stop loss, set the take profit. Okay? Once you do that, literally go look at another pair for potential trades. Okay? Go look at another pair for potential trades to see if they have, if the other pairs develop even more confirmation. So if you were looking at 3 pairs, and out of those 3 pairs you saw one that really had all the confirmations you were looking for, you took the trade, you set the stop loss, you set the take profit. Okay, cool, that trade's in the books. Journal it, take a picture of it, whatever, however you want to journal that, but definitely make sure that you journal it. Take a picture, put it in Spreadpoint, PowerPoint, whatever, however you do, whatever works for you, I don't care, but just journal it. Because if you lose the trade, then it's very important to go back and look at it and see what happened, what could I learn from this loss that I make sure I won't do that same mistake again on the next trade that may look like this. So these are all very important things to remember and to keep in mind. So look for the other potential pairs. So out of the 3, and let's say you took 1, now you have 2 pairs. Out of those 2 other pairs that you were looking at, are any of those 2 showing more evidence for you to take a second potential trade or even a third potential trade, right? Do they have the evidence? Remember that you don't need to take a second or third trade if the evidence is not there, okay? We're not here to just put in 80 trades. We're here to take the very best. But taking the very best takes a lot of patience. It takes patience to wait for the right setup. And it takes time for you to learn the patience. Okay? So let's take a look at what I like to call the quick hit list. Okay? This is, I think everybody should make some type of a list. Call it a checklist, whatever, right? But just a quick checklist that you can just scan through. Be like, are all these things present there for me to take the trade? It'll give you much more confidence. So are the candle pattern formations present, right? Remember, are you trading off of the high or the low of the day? Okay. Do you know what level you're on? Do you know what cycle you're on? Okay. Is the Asian range 50 pips or less? Remember what I talked about, the Asian range being 50 pips or less. Obviously, you adjust that according to the market conditions. If you're not having any kind of global major pandemic like we are currently right now, you stick to the rules, 50 pips or less. Right now, obviously, the Asian ranges are, 150, 200 pips sometimes. So those are things to to consider, obviously, and adjust on your trading plan. But generally speaking, 50 pips or less, Asian range. If you're trading NZD, AUD pairs, JPY pairs, you may get ranges that are 70 to 80 pip, and I think those are pretty much normal for those particular pairs sometimes. So that's completely normal for them. The things don't change for you to actually trade. You still need the pattern, you still need the timing to be right, and you still got to know where you are in the cycle, right? Identify what type of cycle you're in so you know that you're going in the right bias, in the right direction. News events, we just talked about those. Check out the news events. What are the news events that are happening today? Are they actual news events that will impact? Are they actual news events that will impact that particular that currency? And will it impact it in a way where it moves the market 30, 40, 50 pips in 1 or 2 candles? Okay, remember, not all news events are created equal. Not all red folders mean that the markets are going to move some crazy amounts. Okay. TDI signals, right? Use those. Or is the TDI helping you at all? Is it giving you any kind of signal? We just talked about where you are in the cycle, right? So all these things, you can add more to this. This is just very, and not in any specific order. This is just a very simple, quick hit list. Okay, you can take away, you can add more stuff to it. It's completely up to you. But very important for you to understand and make some kind of a quick list that you can have access to on paper and just look at it, maybe laminate it and get a marker, and then have like little boxes next to them. That way you can check it off and then re-erase it if you want to, something like that. However you want to do it, guys, but definitely have some kind of a hit list that basically just before you take the trade, boom, you can go right through it and you can start check. Okay, how much more confidence you think that's going to give you, knowing that, boom, you got everything checked on your list? This is how you kind of just grow the consistency over time. And as you grow and as you get the list, you become very comfortable with it, and it becomes like something that's automatic, just like driving a car. It's just something that you know how to do. You don't really put too much thought into it or anything like that. You just do it, So guys, I hope that you learned a lot from this particular video of daily routines, things that you should be doing on a regular basis. Until the next advanced course video, guys, thank you so much, and we'll see you next time.